Thanks everybody for tuning in. I think this is very helpful for us. You have to understand, Brad and I are in the same boat that you are. All of our properties are being managed by our company. The same policies that are implemented for you are implemented for us. And so we have the same risk concerns. So there's four things that I just wanted to talk with each of you about. One of the things that I have found out since the pandemic hit is the title companies are extremely busy. There's certainly sales going through. In our own office, we have sales going through, but one of the things that they're doing a lot of is refinancing. And so if your mortgage, what we're trying to do is to improve cash flow. If your mortgage is higher than about 3.5%, you may want to consider looking at refinancing that as a way to save cash flow. The other thing is that with the CARES Act, if you have a mortgage, and many of our owners do have a mortgage, and your rent doesn't get paid, what should you do? So we'll have a couple of insurance options here, but one of the things that you want to do if you cannot pay your mortgage is you want to contact your mortgage company and talk with them, because there is also mortgage deferment. I'm not really quite sure how that impacts credit scores, but if you can pay your mortgage, then pay your mortgage, pay your HOA dues. But if you can't, then contact your mortgage company and let them know what's going on. So one of the things that Ali mentioned, one of the biggest risks that we have is when our properties are vacant. So we have talked long and hard about, if I have a renter that has been a good renter and has paid and they're just temporarily out of work, furloughed, then what I would rather do, until they may be waiting for their unemployment check to come, they may be waiting for funds to come in through the CARES Act or the property protection programs and so forth like that, I would rather keep somebody in my property, even if they haven't paid their rent current, for at least 45 days, because then my property is vacant. They're more than likely to be able to pay. So that's one of the reasons that they didn't want us to do evictions right away, is because government programs are coming out, and when that money hits, rent is one of those things that they can pay. So everybody will sort of have a different risk tolerance with that. Your financial situations are different. And so on a one-on-one basis, we're happy to visit with you about that. But we're very pleased that about 95% of our tenants are paying. Now, May be a little bit different story, because they may be doing, paying out of savings right now. So anyway, if you look at refinancing, or if you look with your mortgage company, that's one way to minimize some of that risk. The other thing is that Brad mentioned that we're doing is we're still responding to all service calls, but those that are critical, we're responding to those right away. Those that are not, we're trying to follow the governor's rule to not do that. And you can imagine the number of service calls, the service requests has increased greatly because everybody's home. They're working out of home now. And so whether you live in an HOA or whether you live in a home, whether it's a blind or a drippy faucet or something, we're getting those taken care of, but we're not responding to those. The normal way to respond on that, is that if you are self-insured, which means you're just paying for maintenance as it goes. Before COVID, Brad and I were struggling with our vendors to make sure that the vendors, because they're paying higher costs in labor because the economy was so good, we were negotiating standard pricing with that so that we could keep maintenance costs down. Now, after COVID-19, and we're a little bit worried about some of our vendors actually staying in business. And so now we're looking to see which are the strongest ones so that we can have service done rapidly. One of the things that you may want to consider in terms of conserving cash is to use a home warranty or a maintenance plan. So if you have a water heater that goes out during this period, If you're self-insured, it's going to be about $1,450 to $1,900, depending on the vendor. If you have a maintenance plan, you'll spend $60, but you'll spend $45 a month, with it that way. So Brad and I use them on our properties because we just don't like unexpected expenses, but it's just one way to manage cash flow. One of the things that we have been looking at for about a year is a type of insurance that covers rent loss. And I want you to write this down if you would, because the company that we have put into our management agreement is called SureVestor. That's SureVestor. And the SureVestor plan is one that we have looked at, one that we think has some benefits in it. It is really made for evictions. When you go onto their site, which Brad has up, it has pick a plan. And so you'd want to go to pick a plan, and there are 3 options available. Brad, maybe you could just pull that up. Stop right here for just a second on the endorsement. Go up 1 page there, Brad. This is what caught my attention because this is funded by Lloyd's of London. And what happens here is they've come up with a pandemic coverage. So if your renters can't pay and we have to evict them, then this is an insurance plan that you could put on that pays for the eviction costs. It also pays for the lost rent. However, if your tenant can pay, they're just going to be slow, you wouldn't want to use this insurance policy. But it's unusual that right at the start of a pandemic that they would offer this. For the first 90 days or for the next 90 days from the inception of this, they'll only pay half of what the normal payout would be, but half is still better than nothing. We'll talk about that in just a second. Let's go down and look at the plans here, Brad, for just a second. So there's 3 different options. This is paid directly, and I'm going to watch my words carefully here because I am not an insurance agent. I can't recommend. I can only tell you that I'm using this. So, but there's 3 different plans. 2 of them have the best value. The Premier plan and the Ultimate, there's about an $80 a year difference between the 2 plans. But if you go down, if a tenant skips, you can be covered for 4 to 8 weeks. If there's a delinquency, if there's a tenant death, if somebody actually has COVID and dies in the property and there's a problem in terms of getting them out, or if somebody doesn't like our notice to evict, sometimes they can do damage to the property and that would be covered. So one of the things that we like about this particular program is that if we have to evict somebody, then you can be covered from 8 to 12 weeks in terms of rent loss while it gets rented that way. So anyway, there's a seminar tomorrow and we'll send out that link to you, but you can actually get on the line with SureVestor and ask questions, but it's something that you may want to consider because these are unusual times and for about $400 a year. My plan is not to raise my rents during the next renewals for my properties during the next 3 or 4 months, just because I want to see what shakes out. But I do have SureVestor policies signed up for the properties that are expiring during this time. So if I need to get them out, I'm still going to have rent coverage. I'm sure you've got lots of questions on that, but I think if we all get on the seminar tomorrow, I think we can answer some of those. So one of the questions that just came in was, if refinancing, how should we handle the appraisal if the lender wants an internal inspection? Most of the refinances are being done without an appraisal. But if the appraisal needs to be done, then what happens is the appraiser goes into the property, the tenants leave the property, the appraiser does his work, and then comes back out. That's how we've seen it done. It's a good question, Dave. So,
and if you don't mind, Steve, we've actually also seen appraisers go out to a property, but only really look at the outside and then submit their report accordingly. If it's in an HOA and there's good pictures of the inside already,